Hi guys, my name is Habib Mahmoud. This is my first YouTube video I'm uploading, and I made this YouTube channel so that I can share my knowledge regarding the stock market, finance, macroeconomics, a lot of knowledge that I have gained over the year. And I want to share this to the world, to the people who are interested in finance and stock market related news, analysis, a lot of stuff. So this is my first video, and there will be a lot of mistake, a stupid mistake, a lot of camera issues, voice. You just ignore it. This is my first trial, and I'm uploading this video uh, so that I can just learn how these things work. And I promise you guys that uh, from from this I'm going to improve a lot very soon, and there's a lot of content is coming up. I'm planning, so just I just don't want to make you bored, so I want to start the video. So let's get started. I will try to make this very simple, and I will going to explain you in a different way that you have so it's easy for a normal people to understand what a stock market is. And I know there's a lot of myths and misconceptions regarding the stock market that I want clear. So I want to start it from here right now. So what is stock market? Before we come to know, like before we start about answering these questions, what is stock market is, first of all we need to know what why we need a stock market. Okay, what is the importance of stock market? That's the most important thing that you have to understand first before you ask this question, what is stock market is. Okay, so you need to understand the importance of that. Okay, why? I'm gonna share you that, okay, very soon. Why do we need a stock market? Okay, first of all I just want to share you some interesting fact about the market. There's a lot of stock market exists around the world that you don't even know. Okay, I think you never heard of. Okay, so like stock market of like Pakistan stock exchange. Okay, though the economic of that country is very weak. Okay, the country is in a lot of debt, and governments are not stable enough in that country, but that country also have a stock exchange in that country. Like some other country like Dhaka is like it's a Bangladesh, it's a capital city of Bangladesh. Even Bangladesh is like a small economy, and they also have a stock exchange. Okay, like other country like Iraq. Okay, though it has a lot of issues, but that country also has an Iraq stock exchange. Okay, and also a country like Maldives is an island. It's a multiple islands, mix of an islands. Even Maldives has a stock exchange. Why I'm sharing with you this a lot of countries exchange? Because you need to understand that every countries around the world has their own stock exchange. Okay, so it's like you can understand the importance of the stock market is. Okay, stock market is so way beyond price going up and down, gambling, speculating. It's beyond this. It's bigger than that. Okay, so you need to understand the basic principles of behind a fundamental reason behind why the stock market we need. Okay, why is it important for us? That's the reason I'm explaining that a country, any country that want to grow, that want to prosper, okay, economically, they need stock exchange in their country. It's very important. Stock market is also correlated to the growth of a country. If the stock market is a capital market especially is stable and is efficient, then the country has a good potential to grow further. And you have to understand that first. Okay, why we need a stock market and why it's important. So I'm going to explain you why we a country and a country that need to grow, okay, in terms of GDP, in terms of GDP per capita, in terms of anything. If they want to grow and prosper and want to reach to the that high level of economy, growth economy, they need to stock exchange. And then I'm going to explain you why we need that. Okay, okay guys, now we're going to talk about why stock market is important. Okay, this is the next slide I'm going to talk about here. Now if we see, okay, here a company, all right, whenever you need to understand that whenever a country want to grow economically in terms of GDP, the major contributions are given by the companies. Okay, companies are one who contribute to the economy the most. Okay, there's a lot of economical ideologies like socialism, capitalism, communism, but this has a different topic. It's a many topics. I'm going to discuss that later on. But right, you have to understand that when a country and economically want to grow, okay, the company is the one who contribute the most, okay, in terms of GDPs. If you see any economically, and I'm going to make a video on that pretty soon. And so let's say now, if a company, let's say a company want to start a business, okay, a person wants to start a business. When he start a business, beginningly he get a capital from his family, from his friends, or from from small investors, venture capitalists. But when a company start, when that business start to become a company and start to be a profitable and it's doing good, the business become efficient, and the business, the company want to grow further now. Okay, so in order to grow further, or in order to contribute to an economy, they need a capital. Okay, that's where the stock market comes. Okay, stock exchange comes. Okay, so if a company, now these companies want to raise capital, okay, first they go to the stock exchange, right? Once, okay, and they issue securities to the exchange in order to raise capital. What is a security? Security is basically stake and ownership of, okay, of a company. They're going to sell the ownership. Okay, they're not going to sell complete ownership. They're going to sell, like most of the companies who get to the stock exchange, they sell around 5%, 10%, 20%, sometimes even 50% of the company stake they're going to sell. Okay, okay, in the stock exchange. Okay, so what they're going to do, the companies, if they want to raise capital, they have to sell a stake on the in the stock exchange in order to raise capital. Now, the stock exchange is a place where the company who need capitals and the people or investors who has a surplus capitals who want to invest, okay, it comes together in a stock exchange in order to help each other. Okay, the company who need capital, they will get the capital from this exchange, and the investors, the people who have a surplus money, okay, who want to invest, they're going to invest in the company and they're going to make a return out of it. Okay, that's the reason stock exchange is a place where buyers, okay, buyers and sellers of this of the, what you call, shares, and the companies who need a capital comes together. All right, so a company, they're going to issue a securities, okay, to the exchange. Okay, and investors in the exchange, if they think the company is worth buying, they're going to invest their money, okay, through the exchange, okay, in order to buy the stake of this company, the one we are talking about, right? So now let's go to advanced level. Like again, here you can see on this slide, company, whenever they want to raise money, okay, raise money, they bring in an IPO is basically issuing a securities, issuing a stake, okay, in the exchange. All right, now investors, if they think is worth buying, okay, so if they believe that company going to provide them a return, they're going to subscribe to the IPO. Okay, once they subscribe, the investors will give them the money. Like here you can see the company have raised the fund. Okay, once the company utilize the capital and they make some profit or they make returns, they're going to share their profit to the investors in the forms of dividends. You can see here, in the forms of dividend, they're going to share their profit to the investors. So now you can understand the point why the stock market is important. Okay, so most of the people think that stock market is a gambling places where people buy a stock and they go up and they go make a fortune. It's true, it happens, but they don't understand the basic fundamental why the stock market is important. Okay, most of the real investors, they don't understand this, so I want to explain them, okay, the basic fundamental behind the stock market is and how it is important. Okay, stock market is, okay, so if it helps company who need capitals and the people who have a surplus fund who want to invest, the stock exchange the one who help them to come together and help to the transactions of that. Okay, so whenever a company need a capital to grow, they can come to the stock exchange and they're gonna take the capital and they're going to invest the money into the economy, and they're going to provide a job, they're going to make a huge profit for the shareholders, they're going to innovate new products which is good for the economy. Okay, stock market is a place where companies can raise lots of money, like I'm talking about billions of monies they can raise through the exchange easily, like easily they can raise. Okay, that's the reason stock market is important for a company and even for investors who has a surplus money and who want to grow their money or make some return from the market. They can come to the exchange and they make a return out of it. Okay, So this is my point. I want to explain why the stock market is important. So now next point we're going to discuss about, there's a lot of investors in the market. Okay, what type of investors are there, different style of investings I'm going to explain there, and there's some points that I want to discuss regarding the investment styles. So let's talk about that now. Alright guys, so the next that I'm going to discuss about is the type of investors in stock market is. Okay, here's something interesting point that I want to discuss about here, that most of the people don't discuss. Okay, and most of the retailers are misunderstood. First of all, I'm going to talk about what kind of investors are there in the market, who comes to the market and buy stocks on what basis. First of all, you can see there will be like a person, like a trader. Okay, okay, you can see just there will be someone like a trader. Basically traders are the one who time the market, who try to speculate on the price movements. Okay, whenever the market is going up they will buy the stock, and whenever the market is going down they will sell the stock. So they're basically timing the market. Okay, there's no fundamental reason behind any of their decisions they make in order to buy and sell. So whenever they think, they're basically timings like gambling speculators. Okay, so they will be like, okay, I believe the company is going to go up in the next 2 to 3 days, or in next 1 hour or 50 minutes, 6 minutes, 7 minutes, and the next 5 minutes they're going to go up or down. So they basically speculate. They call themselves traders, and there's a lot of traders, they made enough money. Okay, and fortunes, and there's a lot of investor I mean traders who have lost a lot of money and their fortunes also. So I'm going to discuss that also in the coming videos. So now, like I can say, the type of investors, like first investors are like traders, speculators who speculate. The next one is the value investors. Also the example of value investors are Warren Buffett, who invest on the value. If they think that the particular company stocks are undervalued, okay, compared to their balance sheet and assets, and a lot of this different way of finding a value of a company, they're going to buy the company. Okay, and when they feel like the company has reached to the overvalue level, they're going to sell it. Okay, the next investors are like a growth investor, who invest, okay, based on a growth. If they think a company is going to grow in the future, okay, they're going to invest in that company. And once the company has start to grow and its high level is, the growth is start to stagnant and growth start to decrease, they will sell their stocks. Okay, and the next one is that it's a long-term investor. Here's the one that I feel like kind of a myth. Okay, kind of a misunderstanding of the long-term investor. I want to clear this for everyone. See, whenever a person call himself as a value investor, you can see a beginning point and the end point. What I mean with the beginning point and the end point is, okay, basically if I call myself as a value investor, you can understand my beginning point is, whenever I see a stock is undervalued, I'm going to buy it. And whenever the stock start to go overvalued, it can go overvalued within a day, or within a month, or year, or 2 year, or 10 years. Okay, it's going to overvalued, I'm going to sell. So if I call myself a value investor, you can see the beginning point and the end point. Next example I can give you, like growth investor. Okay, if I call myself as a growth investor, you can understand what's my beginning point and the end point. My beginning point will be, whenever I see a stock has a potential to grow, I'm going to invest in that company. Okay, and when I feel like the growth is going to decrease, the growth is at the peak level, I'm going to sell. Okay, so you can see there's a beginning point and the end point. What I mean by that, the buy point and the sell point. Whenever I call myself value investors, you can clearly see what will be my buy point and the sell point. And if I call myself a growth investor, you can understand what's my buy point and sell point is. And even for the traders, okay, traders has a buy point and sell point. If I'm bullish or bearish, so trader has different ideologies. But long-term investors who call themselves a long-term investors, I cannot see where is the buy point and where is the sell point, where is the beginning point and where is the ending point. So how can I, if I call myself a long-term investors, on what basis I'm going to invest in a company? Okay, there are some investors who call themselves as a long-term investor. They will buy any random stocks and they will be like, I'm going to hold for the next 10 to 20 years. Because to be honest, stock market has proved that if you hold for a longer term, you get an edge. Okay, you get the percentage of making money is high. It's true, there's a lot of fundamental reason, okay, macroeconomic reason why it's true. Okay, but there's no end point or the beginning point here, right? So I don't know at what basis they're going to invest, okay, and at what basis they're going to sell. Okay, like if suppose if I've invested in a good company, blue chip companies, okay, and I'm holding for 20 years, and once I finish my 20 years, imagine that time, at that point the stock market has a major crash. What happened? I'm sure you're going to lose your 50% of your value or 80% of your value. So what's the point? You understand, right? So calling yourself as a long-term investor is makes no sense. All right, okay. It's true that investors are long-term investors. They're like investors are who invest for a long term, for a long view, depending on their style. If value investors, I'm being a value investors, I'm investing, and if the value that I have seen is overvalued, I will sell it. If I'm a growth investors and the company is growing, I'm going to hold it. Like for Warren Buffett, they give example as a Warren Buffett as a growth investor. Yes, he is a long term investor, but he invests based on value and growth. Okay, if you see a company is undervalued, he gonna buy it. Okay, and and I'm sure he hold stocks for 10 to 20 years. Why do we hold for 10 to 20 years? Because he's a long-term investor? No, he hold it because the company is still growing. The company still has a potential to grow further. That's the reason he's holding it for 10 to 20 years. A lot of stock, if you see right now, that Warren Buffett on, they is still growing, and it has a potential to grow further. That's the reason he hold them. That's why the people give him the name of a long-term investor. He is a long-term investor, but the why? It's not like he just keeping and holding for 20 years. There's a reason why he's holding it, because the company is growing, company is still undervalued. That's the reason. Not because he just believe that if you hold something for 20 years, 30 years, you're going to make money. This is stupid. Okay, it's not true. So that's my point, that I have a little bit basically this is a point that I'm sharing with you about the long-term investor myths, misunderstanding, misconceptions. It's my opinion. Okay, I just want to know what's your opinion about this. Okay, I believe that you should call yourself some specific investor, like a value or a growth. There's tons of way of investors are there in the market. I'm going to discuss that very soon. But you can call yourself, like me personally, I'm a growth investor. I like to invest in a company that has a potential to grow next 10 to 20 years. Okay, and it's growing, I'm going to hold it, and after 20 years if it's still growing, I'm going to hold it. And if the growth has reached the peak level, or growth has been stagnant for a while, I might sell it. Okay, so that depends on that. So you have to review your portfolio every once in a year, once in 6 months, 3 months. So that's the reason. Okay, don't call yourself as a long-term investor. Call yourself some like a value investor or a growth investor. I think that's a better way to approach the market, right? So that's it. So I hope you guys like this video. Okay, and in the future I'm going to make a lot of interesting videos coming up. Like I'm going to make videos on macroeconomics case studies, okay, current macroeconomic situations, and also a historical case studies. Okay, I'm going to make videos on stock market fundamental analysis, technical analysis, also a case studies of a stock market, and also I'm going to make a video on personal finance. Okay, this is my first video, and I'm sure there's a lot of error and a lot of mistake, a lot of communication issues. I will try to improve myself. Okay, and I'm going to make a good valuable content. I hope you guys like these videos, and if you like these videos, just subscribe to the channel and just give a thumbs up, and just give comment down, okay, what kind of videos you want and what kind of improvement you want from me, so I can improve myself and make a good videos in the future ahead. And this is my first video. I hope you guys appreciate, and I hope you guys understand what I have explained about the stock market is, and about the topic that I have talked about, the long-term investors. There's nothing like a long-term investors according to me. There's specific investors, value, growth. This was my personal opinion and my personal view, and I hope you guys liked it. And thank you so much for watching this video till the end, and see you next time. Bye.